Okay, welcome to Stuff Happens. This week we're talking about the gold market and specifically what's been happening with the gold market. Are we still in a bull market? Um, what we've seen over the last 3 to 4 months is a pretty persistent down move in gold, along with all of the precious metals. In fact, the financial media is waking up to this. Today, we saw two specific stories about is the debasement trade done? And we think this is directly ties in, obviously, to the severe down move that we've seen in gold. And this chart that we show here shows the price of gold plotted against the real yield on the 30-year Treasury. And as you can see, it basically last year, as you can see, the even as real yields kind of bounced around, generally the persistent trend was downward for most of the year, and gold, as you can see, tended to reflect that in a pretty strong upward bias, particularly towards the end of the year. That's when we saw that severe spike at the end of the year as real yields, as you can see in the chart, really came off. So we think that the market's starting to pay, the gold market and all the precious metal markets are starting to pay attention to what's happening on the rate front. And after having pretty much ignored rates for the most part for most of 2025. Darren, what's your thoughts on that?
I think the most, I think, timely pressure on gold prices has been definitely the speech given by Warsh, his opening speech, kind of emphasizing really quite strongly price controls and a new day at the Fed, combined with what seemingly may be an end to the Iranian conflict, although another ship was attacked today. So both kind of strengthen the dollar. So in the short term, gold momentum down, but again, as you touched upon with these articles, I don't think it changes the long term themes of debasement and de-dollarization. And in fact, I think the actions in the Middle East um, make it kind of more prevalent. You're adding more to our deficits. I think the GCC countries will shy away from the U.S. Over this in a large way. So I think it only accelerates the long-term theme, but in the short term, yeah, there's definitely some pressure. But historically, if you look, when gold's been or sold down to a 10% discount or so to the 200-day moving average, it's historically been a good time or a good spot to buy, and that's kind of where we sit right now.
Yeah, and I think there's also, I mean, the one thing we haven't talked about is just all these cross currents too. I mean, last year you had the somewhat the tailwind of foreign equity markets doing well relative to the U.S. market. So I think that was a big driver of a push away from the dollar. This year you're having exactly the opposite. The U.S. markets are doing much better than foreign markets, and you're seeing that large influx of dollar buying for that very reason. But we still think that, again, as you said, that it's the debasement trade. I mean, Warsh is yet to he's had 1 week on the job and the market's already behaving as if mission accomplished. And I think he's a great person for the job. I think he's going to do a great job. But I also think that it remains to be seen how much he's going to be able to affect actions at the Fed. And on the fiscal side, that's just a given that will not. That'll stay at status quo. So this whole perception that the market's going to tighten up and they're going to take care of inflation and which has kind of really loomed over the precious metal markets over the last really 3 to 4 months. We think that's going to dissipate over time. And we think gold right here is an excellent buying opportunity. But I think you've also taken away a lot of the froth. Clearly, at the end of 2025, but going into 2026, there was a lot of speculative elements. I mean, people were talking about $200 silver and $10,000 gold, and these are commodity markets. These are not crypto markets or markets which don't have some physical basis. and those kinds of calls and those kinds of commentary just show that the market was very, very frothy at the end of 2025 and at the beginning of 2026. We think we've taken a lot of that out, and we remain very, very bullish on gold and all of the PG or all of the precious metals as well as the PGMs. So with that, Darren, you have anything to add?
Now we'll just finish with, I think as good as Warsh is in terms of being qualified, he's going to have to face the realities of these deficits being structural. So that does not change. And I would say that I think we prefer, the metals over the miners at this point, taking strict commodity exposure through the ETF, so GLD, SLV, PPLT, for gold, silver, and platinum.
Yeah, that's a good point. I mean, the miners have done very, very well over the last year, but they're finally facing the two-pronged headwind of falling prices, and as also on the revenue side, but also they're going to face challenges on the cost side as well. So they haven't had to face those in a while, and this year definitely we're going to start seeing that in some of the conference calls for a lot of these miners as they start to report. So that's a great point. But with that, we'll wrap it up, and we'll see you next week.